Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So now I'm going to start the next problem number 9. Already 8 long problems I have completed on cash flow statement till the last video. Apart from that, 12 short problems I have completed. Hope my regular viewers are continuously watching each and every video to get the complete command. So my suggestion, don't join in between and don't leave in between. Watch the complete video, then only you can be able to enjoy learning journey, enjoy in getting the knowledge. So from knowledge point of view, it's compulsory. Don't keep your objective very narrow simply to pass the examination. No, you want complete command, you want the power. You must know each and every concept. So the starting 3 videos I have explained you the detail regarding what is cash flow statement, then how it is prepared, what is the importance of cash flow statement, what are the terms, operating activity, investing activity, financing activity, all these things I have explained. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject financial statement analysis. Under that you will find the topic cash flow analysis videos. Watch the starting 3 videos, definitely you will get a lot of knowledge about the concepts, terms, how to prepare the cash flow statement. Now I'm going to start the next problem number 9. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a hard copy printout ready before start watching the video. Now 9th problem. From the following information of Vedansh Enterprises, prepare a cash flow statement. First point, it is not a company. The name of the company will end with the word limited, LTD. Limited must be there. Here it is given Vedansh Enterprises. The first point coming out from this sentence is it's a sole trading concern. Balance sheet as of 31st December. Liability side, capital, bank overdraft, bills payable, creditors. Now, if you observe the liability side, we don't have any profit and loss account. We don't have any reserves and surplus. That means what? That every year profit is adjusted in capital. In sole trading concern, in partnership firm, the profit will be adjusted in capital. Whereas in joint stock company, a corporation, the profit will not be adjusted in capital. The profit will be kept separately in profit and loss statement, in general reserve, like that. So here no general reserve, no P&L account, so that means the profit is adjusted in capital. So we make use the capital to find out the funds cash flow from operating activities. Next, bank overdraft. Previous problem I told you, bank overdraft should be adjusted in cash and cash equivalent. Last item in cash flow statement, last item, cash and cash equivalent. In that we deduct the bank overdraft. Bills payable and creditors, these two are current liabilities. So we take it under operating activities. So you have to remember the rule, increase in current liability, decrease in current asset should be added. That rule from first problem till last problem, you should not forget that rule. Now, bills payable and creditors, actually both are trade payables. In modern terminology, it will be called trade payable. It includes bills payable and creditors. Now, land and building, machinery. See carefully, land and building last year 2,20,000, current year 3 lakh. Land and building has increased. When an asset increases, the increase may be due to purchase. Due to purchase of some more fixed asset, the assets will increase. So here land and building last year 2,20,000, current year 3 lakh. So it means there is a purchase of land and building, investing activity. In investing activity will take purchase of land. Machinery last year 4 lakh, current year 2,80,000. Machinery has decreased. There may be 2 reasons why machine decreases. The first reason may be it may be sold. If the machine is sold, if a part of the machine is sold, then the value of machinery will decrease. Second reason, due to depreciation. On account of depreciation also the machinery may decrease. 2 reasons are there. We'll see what is the reason. Then stock, debtors. This stock is inventory and debtors are the trade receivables. Inventory and trade receivables, and both are current assets that will be taken in operating activities. cash and cash equivalent, last item. Net profit during the year amounted to 1,20,000. The profit earned during the current year 1993 is 1,20,000. So this is the starting point in operating activity, cash flow from operating activity. During the year, a machine costing 50,000, accumulated depreciation 20,000 was sold for 26,000. Now, this is the new point. First time we are coming across in this problem. During the current year, a machine was sold. The cost of that machine was 50,000 and accumulated depreciation provided on that machine was 20,000. 20,000. The cost was 50,000. Accumulated depreciation was 20,000. The book value, the present book value of the machine at the time of sale was 30,000. 50,000 minus 20,000. 30,000 is the book value. And that 30,000 value of machinery was sold for rupees 26,000. So there is a loss of 4,000. So here I have shown, see carefully. So before making the statement, cash flow statement, first of all we'll do some working notes. Working notes. In working notes we'll make two accounts. Machinery account at cost, and secondly accumulated depreciation account or provision for depreciation, anything you can say. You can call it as accumulated depreciation or you can call it as provision for depreciation. These two accounts. In working note here, cost of the machine. What is the cost of the machine? 50,000 given in the last line paragraph. And what is the accumulated depreciation? 20,000. So accumulated depreciation deduct 20,000. 30,000 is the book value on the date of sale. When the machine was sold, its book value is 30,000 and the sale proceeds are 26,000. 30,000 worth of machine was sold for 26,000. So there is a loss on sale. 30,000 minus 26,000, 4,000 rupees, there is a loss on sale of machine. Now second point, the profit earned during the year is 1,20,000. 1,20,000 is the profit. Profit will be added to capital. Now see carefully, what is the capital at the beginning of the year? Last year capital was 3 lakh. Balance sheet it is given. 3 lakh rupees was the last year capital. Current year profit earned 1,20,000. So this 1,20,000 will be added to 3 lakh. So capital on 31st December 92, last year 3 lakh. Profit earned during 1993. Profit earned during 1993, not 1992. Profit earned during 1993 is 1,20,000. 1,20,000. So add up 4,20,000. So capital at the end of the year, 31st December 1993, capital should be 4,20,000. But in the balance sheet, the capital is given 3,50,000. Actually, after adding net profit, the capital should be 4,20,000. But in the balance sheet, it is showing 3,50,000. So how the capital will decrease? Due to drawings. Previous problem I told you, capital will decrease by two reasons. The first reason on account of loss. If there is a loss, the capital will decrease. But here in our problem, there is no loss, there is profit. So capital should increase. Another reason why capital shall have decreased is drawings. Due to withdrawn of money for personal use. Here there is drawing. So instead of 4,20,000, our balance sheet is showing 3,50,000. So it means hidden information. There is a drawing of rupees 70,000. 4,20,000 minus 3,50,000. So one conclusion we can make, that during the current year, the owner has withdrawn 70,000 rupees for personal use. This will be taken in financing activity as a cash outflow. That is the new point. And last paragraph, during the year a machine costing 50,000, accumulated depreciation 20,000 was sold for 26,000. And the provision for depreciation against machinery on 31st December 92 was 1 lakh and 31st December 93 was 1,70,000. Now see, whenever a machine is sold, two accounts we have to make. What are the two accounts? Machinery account and accumulated depreciation account. The machinery account should be at cost. Cost means the written down value plus depreciation. In the balance sheet, machinery value is given 4 lakh. Is there any depreciation given in the balance sheet? No, nothing. So this 4 lakh rupees and 2,80,000 rupees machinery value given, that is the WDV, written down value. But we need cost. That means whatever depreciation has been provided, that will be added back. So how much depreciation provided? Last sentence. The provision for depreciation against machinery on 31st December 92 was 1 lakh. The beginning of the year, provision for depreciation was 1 lakh. So after deducting 1 lakh, we are having a machinery value of 4 lakh. So we add back 1 lakh rupees. So opening value, machinery at cost, to balance brought down. This is the opening balance. The beginning of the year 4 lakh rupees is the WDV and accumulated depreciation is 1 lakh. So total cost of the machinery is 5 lakh. Beginning of the year. Same procedure for end of the year. The current year value of machinery is 2,80,000. 2,80,000 is the WDV. And how much depreciation provided for the current year? Last sentence it is given 1,70,000. So after charging 1,70,000 accumulated depreciation, the value of the building is 2,80,000. So we add up 2,80,000 plus 1,70,000. Here you can say by balance carried down, 2,80,000 plus 1,70,000, 4,50,000. Opening balance should be taken on debit side. Closing balance should be taken on the credit side. Credit side. So WDV plus accumulated depreciation is equal to cost. Here also WDV plus accumulated depreciation is equal to cost. Now accumulated depreciation. Beginning of the year accumulated depreciation is 1 lakh. Here by balance brought down. Accumulated depreciation will show credit balance, whereas machinery will show debit balance. Machinery will show debit balance. That's why debit side. Here accumulated depreciation will show credit balance. So credit side. By balance brought down 1 lakh. By balance brought down 1 lakh. Now closing balance, to balance carried down 1,70,000. 1,70,000. Opening balance, closing balance. Now remember, whenever an asset is sold, 3 entries you have to pass. Remember, better if you write it down when I explain. 3 entries will be passed whenever an asset is sold. The first entry will be sale proceed. Sale proceed. Bank account debtor to machinery account. Bank account will be debited, machinery account will be credited. So by bank, sale. What is the sale proceed? 26,000 given in the problem. First entry completed. Second entry will be accumulated depreciation account debtor to machinery account. Accumulated depreciation account debtor to machinery account. So accumulated depreciation debit side to machinery 20,000. And machinery account credit side by accumulated depreciation 20,000. So accumulated depreciation debited and machinery account is credited by accumulated depreciation 20,000 to machinery account 20,000. Depreciation on machine sold. 2 entries completed. Third and last entry, profit or loss. Profit or loss. Now we have to see whether there is profit or loss on the sale. In our problem there is a loss. Loss on sale of machine is 4,000. The entry is profit and loss account debtor to machinery account. Write on the entries. Profit and loss account debtor to machinery account. The profit and loss account will be debited. Machinery account should be credited. The credit side by profit and loss account loss. How much is the loss? 4,000. That's all. 3 entries over. First entry sale proceed. Bank account debtor to machine account by bank sale proceed. Second entry accumulated depreciation account debtor to machinery account. Third entry profit and loss account debtor to machinery account. That's all. After completing this, we'll find out the balancing figure in accumulated depreciation. Debit side total 1,90,000. 20,000 plus 1,70,000. 1,90,000. From 1,90,000 deduct 1 lakh. So 90,000 is the depreciation provided during the year. Depreciation provided on all machinery during the year is 90,000. This depreciation will be taken in operating activities, non-cash item. So here you can see adjustment for non-cash, non-operating item. Depreciation provided 90,000. So this 90,000 will appear here. Now machinery account. Machinery account credit side 26,000 plus 4,000 30, 30 plus 250, 50 plus 4 lakh 50, 5 lakh. So credit side I am getting 5 lakh. Debit side already 5 lakh rupees is there. There is no balancing figure. No balancing figure. Sometimes if you get the balancing figure here, that means there is a purchase. If you are finding balancing figure on debit side, it means purchase, but there is no purchase. Both the sides are equal. It means only there is a sale of machinery for 26,000. There is no purchase of machinery. There is no purchase of machinery, right? And now we'll prepare the cash flow statement. So Videsh Enterprises cash flow statement for the year ended 31st December 1993. Cash flow from operating activities. First we begin with net profit given in the problem. Net profit earned during the year 1,20,000 given. To this we adjust non-cash, non-operating items. Two items only we have come across. The two items are depreciation. How much depreciation? 90,000 depreciation. This 90,000 depreciation will be taken here. Apart from that, loss on sale of machine. How much is the loss on sale of machine? 4,000. This loss on sale of machine 4,000 will be added back, non-cash items. So two items we came across in this problem. Depreciation 90,000, loss on sale 4,000, that will be added back. Now take the total, 120 plus 90 plus 4, 2,14,000 is the operating profit before working capital changes. Now adjustment for working capital changes. Now we compare the current assets and current liabilities. The current assets are bills payable and creditors. Both bills payable and creditors are current liabilities. Now first of all, bills payable. Last year 1 lakh, current year 80,000. Decrease in bills payable, it should be deducted. Because increase in current liability added, decrease in current liability deducted. So if the current liability decreases, it should be deducted. Here decreases. So deduct. Decrease in bills payable minus 20,000. Now creditors. Creditors last year 1,80,000, current year 2,50,000. Increase in creditors added. Increase in creditors added 70,000. Now decrease in stock. Last year stock 1 lakh, current year stock 90,000. The stock decreased. The decrease in current asset should be added. The decrease in stock should be added 10,000. Next one is debtors. Last year 1,40,000, current year 1,60,000. Increase. Increase in debtors, deduct. Increase in debtors minus 20,000. That's all. So 2,14,000 minus 20,000 plus 70,000 plus 10,000 minus 20,000. 2,54,000 is the cash operating profit before tax. Less income tax. But we are not given any income tax. Put a dash. Take it in the outer column. Cash generated from operating activities 2,54,000. 2,54,000. Now cash flow from investing activities. Cash flow from investing activities. So assets. Two assets are there, land and building, machinery, plant and machinery. First of all, land and building. Last year 220, current year 3 lakh. Land and building last year 2,20,000, current year 3 lakh. There is a purchase of land and building for 80,000. So purchase of land and building 80,000. Purchasing means there is cash outflow. When we purchase the asset, cash outflow negative. So put it in bracket 80,000. Sale of machinery. One machine was sold for rupees 26,000. Machine was sold. The sale of machinery 26,000. This 26,000 is inflow. Inflow without bracket. Outflow bracket minus. So 26,000 minus 80,000. You will get minus 54,000. Minus 54,000. This is the cash used in investing activities. That's all. The two activities completed, operating, investing. Now financing activity. Only one item is the drawings. I told you drawings are 70,000. 70,000 rupees are the drawings. The outer column 70,000 negative. Drawings means cash outflow. Outflow in bracket. So cash used in financing activities. Over. All the three items values we got in the second column. 2,54,000 minus 54,000 minus 70,000. You will get 1,30,000 positive. Plus positive. So net increase in cash and cash equivalent. If you get positive, it is increase. If you get negative, it is decrease. So here positive. So net increase in cash and cash equivalent. To this we add cash and cash equivalent at the beginning of the year. At the beginning of the year. The beginning of the year means 1992, last year. The last year cash balance minus bank overdraft. See here, last year cash balance was 40,000. Last year cash balance was 40,000 and last year bank overdraft was 3,20,000. Bank overdraft 3,20,000 and cash balance 40,000. So 40,000 minus 3,20,000, you get minus 2,80,000. Minus 2,80,000. Now 1,30,000 minus 2,80,000. 1,30,000 minus 2,80,000, you will get minus 1,50,000. What is this minus 1,50,000? Cash and cash equivalent at the end of the year, at the end of current year 1993. Now we confirm whether our answer of minus 1,50,000 is correct or not. Go to the balance sheet. Current year cash is 50,000 and current year bank overdraft is 2 lakh. Current year bank overdraft is 2 lakh. Cash balance 50,000. So 50,000 minus 2 lakh, you will get minus 1,50,000. 50,000 minus 2 lakh, you are getting minus 1,50,000. That means our calculations are absolutely right. So in this video, I have completed a long problem, 9th problem. Many new points we came across. See here, every problem almost 90% points are same. Only 10 to 20% points are different, new one. So if you want the complete command, then focus on the new point what we have learned in this problem. So the new point is, first of all, machinery is purchased. 2 accounts we have prepared. So whenever a machine is purchased, 3 entries we have to pass. Sale proceed, accumulated depreciation, profit or loss. Sale proceed, bank account data to machinery account by bank. Accumulated depreciation account data to machinery account for accumulated depreciation. For loss, profit and loss account data to machinery account by profit and loss account. That's all. After this balancing, take the total debit side. Here balancing figure 90,000. This is the depreciation for the year. It will be added, right? Similarly, the loss on sale, that 4,000 is also a non-cash. It will be added. That's it. And purchase of this, sale of this machine. Sale of the machine 26,000. That will be taken as an application, payment in investing activity. In investing activity, sale of machinery, it is cash inflow 26,000. That's all. Apart from that, capital. We have seen the capital. The capital at the beginning of the year was 3 lakh. During the year, 1,20,000 earned. So total 4,20,000. But in the balance sheet, it is given 3,50,000. That means there is a drawing of 70,000. That drawing should be taken in financing activity as cash outflow. As cash outflow. That's all. So in this video, only one problem I have explained in detail. So watch the video till the end. Then definitely, first time if you are not unable to understand, second time definitely you will get the command. So inshallah, we'll continue the next problem in the next video.